I was given 20 minutes, 15 to 20 minutes to go through this very, very quickly. So I'll try to get this done in about 15 minutes and hopefully leave some time for questions. So I was actually asked to speak a little bit about investment trends. So if you don't know who I am, my name is Marvin Liao. I'm actually a partner at 500Startups. And let me go into 500 startups. So we're a venture capital fund. These numbers are a little bit out of date. We have a little bit over $200 million under management. We've invested in over 1,500 companies worldwide. A little bit about myself. I'm a partner at 500 startups. I've run the SF office and accelerator. So in the accelerator programs I've run in the last 2 years, I've actually invested in over 183 companies. And for the seed fund, I've actually invested in I think probably close to 36 companies in the seed fund in the last 2 years. So as you can imagine, between my own investments as well as investments that a lot of my partners have done, we've done over close to 1,500 investments. And because of that, I get to see a lot of companies and sort of hopefully have a good understanding of trends. And because I run an accelerator program as well too, I spend a lot of time talking to a lot of downstream investors and venture capitals, and looks like it's down. Is everything okay? Technical problems. All right, of course there's technical problems. And so I spend a lot of time actually talking to downstream venture capitalists, and this is actually how I've come up with sort of, with sort of this list. So I was told to talk about what's hot and what's not in Silicon Valley from a global trend perspective. So this will be very, very quick. It's more of a broad overview. This is a subject that's near and dear to my heart. I spend every single day talking about this to my companies and based on sort of what I'm seeing in sort of what I'm investing in and deal flow that I see. So hopefully you'll find this helpful. But having said that, just because a trend is, I just want to say this, just because a trend is hot or not, doesn't necessarily mean if you are interested in doing startups, you should follow that trend. I just want you to be aware of what is being funded these days. What is more important for you as a startup founder investing your time and energy is to figure out what the real problem it is that you care about and focus on that and do that irrespective of whether it's going to raise money or not. Okay, so just before I go into all this. So let's talk about stuff that investors hate right now. Social networking, it's very 2007, 2008. It's not sexy at all, and if this is what you're working on, you will probably not raise any money, number one. Number two, ad tech. So ads, anything with ads, this is actually the world that I came from. It is a absolutely horrible, horrible space to actually invest in. I think, is anyone here familiar with the Lumascape? Do you guys know what the Lumascape is? I think if you are in this space, and I think Arabnet tradition has actually focused a lot on digital ads, I mean, it is very, very, very crowded. And so there's very little differentiation. And if you think about the big platforms, it's really just Google and Facebook and maybe Amazon and everybody else. Like, there's nobody else. It's just those three players are dominating most of the ad world right now. Look at e-commerce. E-commerce, same thing, right? You have a couple big players across the world, but these are really, really hard businesses to build, right? Like, even if you're making $40, $50 million a year in e-commerce business and gross revenue, it's actually still not interesting for most venture capitalists right now. And I think the challenge too, that's happening with all these industries, whether it's e-commerce, delivery, transportation, on-demand, food delivery, gaming, consumer messaging, what should be very, very clear with all these trends, these are really crowded spaces that have been crowded for a long time, very limited differentiation, and also there's been a lot of losses. So a lot of venture capitalists, like whether it's our firm or a lot of other firms that are downstream from us, they have lost money investing in these spaces, which is why they won't touch it anymore. All right, so this is what we're seeing. Having said that, that doesn't necessarily mean that you can't build a great business in these spaces. There's a lot of big secular changes and global trends that are moving. There's a reason why these things exist. You can still make a great business. You probably just cannot raise venture capital money for this, all right? Okay, so a couple things that you should be aware of, general trends that we're seeing, and there's data to back this up. Virtual reality and augmented reality. And this is, I mentioned in my earlier sort of like panel, the panel I was part of really mobile. what is driving a lot of this is actually mobile, in my opinion, right? I think the challenge with augmented virtual reality is probably still about like 3 to 5 years out before it becomes very, very big, because a lot of the platforms are just slowly being built, right? So if you look at the investments that Facebook and Samsung and Google are actually making in sort of like VR handsets and VR sort of like eyewear and things, what is missing in this space is actually the content to actually go over this. But you're starting to see a lot of developments now. Hollywood is starting to come on board here. A lot of sporting, like a lot of the big sporting events are now starting to pay more attention to VR. So my take, as the handsets and a lot of these VR tools become cheaper to buy, there's also going to be a lot more content that's going to be able to stream that you can actually look through this. And that's going to take some time. But I'm thoroughly convinced that actually VR and augmented reality, we are very, very early days, but it's a big, big space. Let me click this. Not working. Next slide, please. And so just in 2015 alone, this is a relatively small number, right? 126 AR and VR startups have raised about $658 million, right? It's not bad. By Silicon Valley standards, it's not a lot, right? But it's actually, you're starting to see movement of investors here, so still very, very early days. And so pretty exciting space. In my view, for being an early stage investor, it's actually better to be early than to be too late in this area. So a lot of these investments are going in right now are actually learning investments too. Okay. The other thing, Internet of Things, it's really the Internet of everything. You're starting to see devices and sensors on everything that you're making, whether it's cars, your refrigerator, it could be rooms in the future, right? Like everything is going to have something, some sensor attached to it. And this is actually going to dramatically change both consumers' lives as well as B2B. And I also think one of the big changes, and what I don't talk about, but one of the big things that's also going to drive is actually digital health. We know with sensors actually tracking everything now, this is going to be really, really, really important, particularly for digital health, especially as you're seeing a lot more people getting older in the developing world, or the developed world. This is going to be much more predominant, all right? And this is a big number, right? Just in 2015, they've raised over close to $1.9 billion of startups in IoT space. And I expect this to continue to grow. And I'd say majority of these investments have actually been the consumer side. We haven't even tapped the stuff on the B2B side and enterprise side. Just early days here. FinTech. Love FinTech. And part of the reason is because think about this, right? Like everybody hates their bank, or at least I can speak in Canada and the US. Like you hate your bank, right? And I think the challenge that a lot of the banks have, they're old. If you think what a bank is, it's big data, right? It's data on who has lent me money and where am I lending money to, right? And who I'm lending money to. That's basically software. And the problem about this, of how you manage this big data, big banks do not manage it very well because of old infrastructure and mindsets. The big difference with FinTech right now is just banks are starting from scratch. And what's happening is if you look at what happened with like Hollywood, right? The unbundling of Hollywood, think about what a bank is, right? Bank sells you multiple different types of like financial products. What's happening in the FinTech world now is that FinTech is actually going after very specific things. So you're seeing a lot of FinTech companies going after SMB loans. You're seeing a lot of FinTech companies going after like credit cards. You're seeing payment services. Like every little piece that sort of used to be bundled by bank is being attacked specifically by FinTech startups. And that's actually the exact same thing that happened in media. It's happening in banking right now. And a lot of the banks are just clueless to this because they have all this old infrastructure that you cannot start from scratch, highly regulated, so they can't move very, very quickly. And what is interesting here, in Asia, $3.5 billion of money has actually gone in 2015, right? In the US alone, in Q1 of 2015, $3 billion of VC investment has actually gone into FinTech in Q1 of 2015 alone, right? So there's a lot of money going to this space. That means more and more startups attacking these big banks. And if you look at, even my batch, I have 53 companies in this batch, 11 of them are FinTech-related companies. All right. Let's go. The other part, millennials, right? So millennials, particularly in the US, and so millennials, it'd be like Generation Y. I'm Generation X, so it's a huge portion of sort of the population, and they're driving a lot of trends, right? I'll be the first to say, I still have no idea what I know what Snapchat is, I don't understand the use case. And think about messaging services, right? It's all driven by millennials, and like millennials is driving the type of channels that companies are reaching consumers. They're driving a lot of like the sharing economy, like everything that, and how technology is being used in general. Millennials are actually driving all this technology adoption. And so think about like the example I use of Snapchat, right? This is completely driven by millennials, right? And this is part of the reason, if you look at why a lot of these established companies are buying companies like Instagram, or buying like Facebook, buying Instagram, spending $1 billion, or Facebook spending $19 billion on a WhatsApp, because they saw that a lot of people were using these messaging platforms and they didn't have a play, right? And it's unsexy and uncool if you're a millennial to be using Facebook, but it's actually, they're using messaging services right now. All right, so that's part of the reason driving a lot of the decision-making process of just sort of marketers, driving a lot of decision-making process of startups, and also banking, right? Millennials bank, the previous example I used of fintech, millennials want to bank in different ways, right? Like, why do I need to show up at the bank on my smartphone? I should be able to do all my banking just through a smartphone, and a lot of these banks are not well equipped for that. And yeah, the other part too, right? If you think about this, high penetration of smartphones, so millennials are using smartphone use for different things, for dating, shopping, fitness, whatever type of services are. They're changing. It's a big mass audience coming on board and using, and their consumer behaviors forcing a lot of these big companies to change the way they reach them. And a lot of the big companies cannot adjust quickly enough. All right, and that's where startups actually win. The other one, future of learning, right? Everyone knows education is broken, I think, everywhere in the world. And I think between the smartphone driving a lot of this stuff and these new technologies being bundled with this, I'm really, really, really bullish in general with ed tech, right? Ed tech comes in and out all the time. I think you're starting to see a resurgence in general because we see how broken it is. And there's literally, what's $1 trillion in the US alone probably spent in a very, very broken education system. And messaging, I mentioned this before, messaging service. Think about what's happening with and I'll jump to the next slide, which will make more sense. But if you take a look at, here you go. So trend number 7, I'll jump back to messaging. Trend number 7, you're seeing a lot of business models actually being copied from China, right? A lot of the leading edge is actually not from the US now. So I mentioned to you messaging services, right? In China, there's this messaging service called WeChat. And in WeChat, they have a product called WeBank, banking for messaging, right? And also they're selling, there's e-commerce, there's WeMedia, so people actually, almost like how people are using Twitter for broadcasts, they're using WeChat now as messaging services. If you look at what Facebook is doing with their messaging service, I'll go back, right? Oh, here it is. Next slide, to the messaging app one, next one. Sorry, trend number 6, please. Yes, that one. So if you look at messaging, you're starting to see, partly driven by the millennials now, just the integration of a lot of these services, because millennials are spending so much time with messaging services. We're spending a lot of time messaging services. You're integrating a lot of these services like banking, ordering taxi services, gaming, all on the messaging platform, right? And so basically what's happening in line of trend number 7 with copying from China, of just what Facebook is doing is they're looking at what's happening with WeChat in China and going, all right, great, let's go and take what works in China and adopt it here in the US and push it out to the rest of the world. And that's a very, very new thing, right? Where if you think back 10 years ago, it was China copying everything in the US and adopting it. There's so much critical mass now in China, it's a reverse now. So there's a lot to learn from what's happening in China. They're innovating on so many fronts with a lot of these technologies. Next slide, please. Next slide. Rise of cybersecurity. Does anyone know what Stuxnet is? Do you know Stuxnet? Are you familiar with Stuxnet? Did everyone hear, okay, let's not talk about that one. How about, everyone must have heard about the hacking job of what happened with JP Morgan, right? JP Morgan spends close to $250 million on security for their systems, right? They got hacked. I think they lost something like 80,000 records, right, of their customers. It's pretty scary, right, for a bank. So they actually understand how much money you have, all the details of your life. Pretty scary. Target, right? Target got hacked. CEO lost his job because of a hacking job, right? So rise of cybersecurity. expect, especially like all the trends I mentioned to you, IoT, right? Like everything's connected now, right? Literally everything's going to be connected now. Data being passed back and forth. Companies, e-commerce, more and more e-commerce. Like everyone is pushing all these data points all over the place, but they're unsecured, right? And so if you think about what's happening now, and with big companies, even our world, right? It's so easy to get hacked now because of just there's a lot of smart criminal people out there doing this. And if you think about infrastructure, right? So I mentioned Stuxnet. Stuxnet was malware that was sent to basically crack like Iran's sort of like nuclear sort of like program. Like these things, and there was a great example recently where in the Ukraine, they believe Russian hackers actually sent like malware and actually shut down a big part of the power system. You're going to see lots of government investment. You're going to see lots of corporate investment. You're going to see a lot of consumer investment into cybersecurity software, right? Because as everything gets more connected, you're going to see a lot of viruses and malware sort of spreading all over, and this is going to damage our economy if we don't fix this. And so what's happening? Next slide. In 2015, VCs poured $3.3 billion into cybersecurity startups. And so expect this trend to continue. I actually think that this number will probably double this year, would be my guess. Okay, next slide. And that's it. So I want to open up 15 minutes, right? Was that 15 minutes? I'm usually pretty good about this. So anyone have any questions? Yes. Yeah, I got your question. So the question that you asked was, so you're seeing all these startups raising a lot of money, then going public, and then kind of going nowhere, or at least going sort of below valuation. Do I think that there's a bubble? I definitely think there was bubblish sort of activity, but the reality is that I think Bob Metcalf said this before. It's just like, look, innovation is a bed of weeds. It's not a flower bed. So you're going to see, like, let's just say there's literally, you've heard this term unicorns. I think there's about 130 unicorns. The reality is that 90% of them are going to die, right? But out of those, like, let's say it's 100 unicorns, there's going to be 10 unicorns still around that are real companies. The rest of these companies will probably die. That's actually the nature of innovation. I think that's okay. It moves us forward. But yes, there's definitely bullish behavior. And I think that's the nature, right? It's an upcycle. There was a lot of money flowing to the space, and now there's a lot of money flowing out of this space, right? So it corrects itself. I think for 10% of those companies are probably sustainable business models. A lot of them probably are not.
In the region, we have a lot of, Uber for the MENA, or this big app for the region, and so on and so forth. Is this something viable? Can someone keep coming over and over again with just the same offering as anyone else, but customized for the region?
I think it's, like I said, I mentioned to you, I think it's a valid model as long as you're solving a real problem, right? Like, I think it's okay. My take is like how we look at innovation in Silicon Valley versus in this region or any other region is probably different. We care about the fact that you're solving a real problem. There's nothing wrong with that. Even though it might not be an original idea, who cares, right? You're reducing the risk of business model risk. There's still market risk because there's still some adoption that needs to happen. That's not easy either. And I think that's okay. Yeah. You have to start somewhere, right? And I think like if you look at most ecosystems in general, like there's starting to be a lot of really innovative companies coming out of Germany. But if you look back like 5 or even 7 years ago, they're all copycat businesses, right? But I think it takes some time. There's some evolution that needs to happen and some maturity that needs to happen in an ecosystem. And you need some small wins in the beginning, right? Like you're never always going to hit home runs. You get singles and doubles, and that's fine, right? I think in an early ecosystem, that's okay. But it's a good question. And yes? What advice can I give startups to increase adoption rate? So I think it depends on your startup. So it's very specific, right? Yep. Okay, so if it's a very new concept, like look, the reality is that sometimes there's a lot of education involved, right? Like not all of us, like in the early days of Amazon and e-commerce, right? Like this is like the mid-90s, a lot of people were not comfortable like giving them their credit cards. So they had to open it up where they had to make it available for ordering on fax machines or calling them up to go and do it, right? And I think, but now they don't do that anymore, right? So I think sometimes there's some adjustment in the business model and your approach, and sometimes you have to do that, right? Whatever it takes to survive and win. Okay? Yeah, all right, I guess I'm getting the boot. Thank you very much.